Top 10 Tech Stocks to Watch in November 2025 by AZLAN Adnan, MA. Thursday, October 30th, 2025. Here are 10 technology stocks worth watching in November 2025, each with key growth drivers and risk factors. This is not investment advice, it's a structured overview for consideration. 1. AAPL Apple Inc. Growth drivers. A large, well-diversified consumer tech business with strong product ecosystem and services growth. Risks. Slowing smartphone market, hardware margin pressure, high expectations. Watch, quarterly earnings, services segment performance, margin trends. 2. MSFT Microsoft Corporation, growth drivers, major cloud business Azure, enterprise software, AI integrations. Risks, heavy valuation, strong competition in cloud and AI, macroeconomic risk, interest rates. Watch, growth rates in cloud AI, guidance, competitive developments. Why did Microsoft shares fall off a cliff today? Although Microsoft delivered a strong quarter, beating revenue and earnings expectations, its shares still dropped sharply in after-hours trading. Key reasons include: the company disclosed very high capital expenditures this quarter. Spending surged by roughly 74% year over year to nearly $35 billion, largely on AI infrastructure. Guidance for the next quarter implied that, while growth remains solid, margins may be under pressure, and capacity constraints in the Azure cloud and AI segments will persist. Despite strong cloud growth, Azure up around 40% year on year, investors were disappointed that results only met lofty expectations rather than smashing them. Many traders took profits after a long rally, making even good results a trigger for a short-term correction. In short, strong results but even stronger spending and cautious guidance sent Microsoft's share price sharply lower while other tech giants rose. 3. NVIDIA Corporation. Growth drivers, leading position in AI infrastructure and GPUs, strong take-up of AI workloads, risks, supply chain constraints, export regulation risk, sky-high expectations. Watch, product launches, chip demand trends, regulatory export news. 4. AMD, Advanced Micro Devices Inc. Growth drivers, processor and data center growth, AI infrastructure exposure, architecture gains. Risks, intense competition, Intel, NVIDIA, cyclical semiconductor demand, roadmap execution. Watch, server, data center market share moves, margin trends, product cycle. 5. AG Broadcom Inc. Growth drivers, strong exposure to AI chip and networking semiconductor demand. Risks, high valuation, dependency on a few large segments, cyclical exposure. Watch, AI-related revenue, semiconductor cycle indicators, margin stability. 6. AMZN, Amazon.com Inc. Growth drivers, cloud, AWS, e-commerce and digital advertising, robotics logistics efficiency improvements. Risks, slowing retail growth, margin pressure, regulatory scrutiny. Watch AWS expansion, ad revenue trajectory, logistics cost trends. 7. Google. Growth drivers, search dominance, advertising reach, cloud and AI progress. Risks, advertising budget sensitive to macroeconomics, regulatory antitrust threats. Watch, cloud segment profitability, ad growth, resilience, AI product rollouts. Meta Platform. Growth drivers, expanding AI capabilities, strong social media user base, ad revenue recovery. Risks, massive capital expenditure, cyclical ad demand, privacy and regulatory risk. Watch revenue growth, user engagement metrics, returns on AI and metaverse investments. Why did Meta shares fall off a cliff today? Despite posting solid third-quarter results, Meta's shares plunged in the after-hours session. The key factors are: Meta warned that its expenses will grow significantly in 2026, driven by infrastructure costs and large compensation packages for newly hired AI talent. The company recorded a one-time tax charge near $16 billion, which greatly reduced reported profit despite strong revenue growth. Even though revenue rose about 26% year on year, cost growth, around 30+%, outpaced it, raising margin concerns. Investors reacted to the message that while growth remains, the near-term profit outlook is weighed down by heavy spending and future risk. In short, great top-line growth, but the combination of tax hit, higher costs, and aggressive spending spooked the market and led to a sharp drop. 9. PLTR, Palantir Technologies Inc. Growth drivers, rising AI-driven analytics contracts across commercial and government sectors. Risks, high valuation, reliance on big contracts, execution risk. Watch Q3 earnings, new contract wins, margin guidance. 10. Smaller or mid-cap tech names, smaller cybersecurity, AI chip, or cloud software firms may offer higher growth potential and greater volatility. Growth drivers, disruptive innovation, niche dominance. Risks, execution risk, cash burn, market sentiment. Watch, adoption rates, profitability milestones, funding conditions. How to approach these stocks in November. Focus on catalysts such as earnings, AI infrastructure updates, and product launches. Compare valuation versus growth, since many tech giants trade at premium multiples. Monitor macroeconomic conditions. Interest rates, inflation, and global liquidity strongly affect tech valuations. Stay alert to regulatory and supply chain developments. Watch execution. Success in scaling AI and cloud will separate winners from laggards.